Hi, I'm Vince Molinari, founder and CEO of FinTech TV, and you're watching Taking Stock.
2 minutes to go here into the closing bell. It is time to rock and roll on the Taking Stock broadcast, one and all. I should know the name of the show by now. We've been doing it for quite some time. Welcome to the broadcast today. I'm your host, JD Durkin, here on the trading floor of the New York Stock Exchange. Not quite at session lows, my friends, but not very far off. The S&P 500 into the closing auction here on the street in negative territory, 1.3%. The Dow is actually in positive territory, though in a very small way, up 0.05%, kind of going back and forth between gains and losses on the day. The New York Stock Exchange Composite Index expected to finish in the red, 0.5%, while the small caps are expected to finish down, let's call it 0.9% as well. The tech rout continues as the tech-heavy NASDAQ in negative territory, about 2%. That has been the tail of the tape all day, and we're expected to see those losses continue into the closing tape. Consumer staples, real estate, and healthcare, the strongest performing sectors in the S&P 500. And your S&P 500 laggards includes tech shares, industrials, and materials. Over to the Dow we go. IBM, Merck, Verizon, far and away the leaders of the pack. We do have a few Dow laggards that are worth mentioning as we bring you the closing bell. Caterpillar, NVIDIA, as well as Honeywell with the Mag 7 tech stocks in mixed territory into the closing tape. Microsoft up 2%, shares of Tesla down 5%. We got the amazing team from Devon, ticker symbol DVN, here at the big board, set to do the honors. Time now for the close. More Taking Stock after this. And the crowd goes wild down here on the trading floor of the big board. Oh, the Dow finished down, unfortunately. Your final tail of the tape, the S&P down 1.43%. The Dow 30 components down 0.09%. Just very fractional losses on the day. The NYA down about 0.5%, while the small caps in negative territory, about a full percent. We are closely following Cerebros's Q1 earnings after the bell, set to report and get the earnings call really any minute. The first major test for the AI chip maker since their IPO back in May, which of course priced at $185. Shares of Cerebros opening at $213 this morning. We are following the Dixie, now up to 101.18, that psychological level of 100, its highest level going all the way back to May of 2025. The VIX up on the day, that shows us volatility expectations, at least for the S&P 500, are a bit elevated. Gold and silver both down. The oil benchmarks both down about 1%. The crypto majors down. But we do have a few sectors worth noting before we bring in our first guest catching a bid. The airlines having a strong tape, oil and energy stocks, software stocks, and the quantum names led by Arctic Quantum up 30% on the day. Let's bring in the one and only Phil Rosen. He is the Chief Market Strategist at ProCap Financial for his take on today's tape and much more. My man, Phil Rosen, Tuesday here on the show. Thank you for being here as always.
Thank you for having me.
So, I mean, more broadly, we woke up today, tech sell-off, not just here in the U.S., but I love my conversations with you, among many other things. You always track what's going on overseas. What do we see in South Korea this morning?
I have loved South Korea for several years now, and today was really the first meaningful pullback. We saw a couple trading pauses because they dropped 10% in the Korean stock market, and to me, that is the indication that the global AI bull market is starting to get a little frothy. People are getting a little jittery. There's a lot of fears of Fed rate hikes before the end of the year. I don't think that's going to happen, but that's what a lot of the investors and markets are looking to. But to me, the tech trade today pulling back a little bit. You saw the Dow almost finish positive, and you saw all the defensive names actually go up on the day. Walmart, Procter & Gamble, Johnson & Johnson, Verizon, all these names that people go to in times of peril. So the stadium is not necessarily clearing out in the market. People are just switching seats right now. So to me, this is a very healthy pullback in a resilient bull market.
So let's look at some of these Dow names. These are the blue chip, the 30 Dow stocks, the household names you and I know and love. We spend our money on them every day. Here are your leaders today: Phil Rosen, IBM, Merck, J&J, Travelers, Verizon, P&G, Walmart, Sherwin-Williams. You talk defensive, you talk risk off. What does that type of rotation tell you for a market that really has been ripping at all-time highs, and from time to time we're reminded of a little bit of a pause?
There's nothing wrong if the market rotates into other corners of the market, especially when these are corners that typically go up in any economic scenario. So if you see defensive consumer staples starting to pick up, that doesn't mean the end of a bull market. I've seen people call the top today, say, look, Alan Greenspan passed away and that was the top of the bull market. I think that's a bunch of baloney. Tech has plenty of room to run. AI is not slowing down just because South Korea is slowing down. And look, I'm very optimistic, and maybe that's a big issue of mine, but I don't see a reason to change that today.
Yeah, of course, and we honor the life and legacy of the late, great Alan Greenspan. Everyone on Wall Street has been saying lots of great things about the former Fed chairman yesterday and today. This is a great note of yours. Google losing 2 important AI researchers. What is the key context of that story that I heard first from you, Phil Rosen?
Everyone is leaving their current companies to go to Anthropic or OpenAI. That's been happening for over a year. They got the best frontier models and they got the smartest AI researchers. I don't know why this spooked markets so much, and maybe I'm just latching onto the wrong thing as to why Google went down the other day. But Google is a monster of a company. There's no way that a couple scientists leaving is really going to change the valuation long term. On a day-to-day, sure, maybe it did, and that's what we saw. Gemini is still the 3rd, if not 2nd best AI model we have. And if they're losing all their AI talent and Gemini is still up there, number 2 or 3, I don't know why people got so spooked by that. Google, to me, it's one of my favorite stocks long term. I'm very long Google, and there's no way that a couple headcount shifts are going to change the valuation.
Yeah, maybe a little bit of a knee-jerk overreaction for one of the Mag 7 giants. The great Phil Rosen, Chief Market Strategist at ProCap Financial. My man, you know, you don't need me to tell you. You got an open invite here on the broadcast anytime. Nice to see you.
Thank you for having me.
We'll do it again soon, and I'll take your mic. Jeff will go this way. Here are a few of the top analyst calls that moved the tape this morning here on Wall Street. First up, Susquehanna initiating coverage on SpaceX at neutral. They say investors should probably wait for a bit of a better entry point. Their price target 170. SpaceX was down in the morning session. Nice rebound into the close, up about 2%. Next up, Wolf downgrading Home Depot to appear perform. Wow, Kristen Myers here in person. What's going on, friend? They say demand remains choppy and the stock remains in limbo. Home Depot down 5% on the year, but nicely bouncing off that 50-day moving average on the technicals earlier today. Finally, Evercore ISI downgrading Nike to inline. Yet another analyst on the street who says, love him or hate him, the turnaround story for the stock simply taking much longer than we had previously expected. Shares have been range-bound since early April for Nike, down 33% year to date. Jeff, we'll take a look at a couple stocks that call the big board their home. We got to start with Target, up 3.4%, the best performing retailer year to date. Contrast that with Macy's up 8%, Walmart up 7%. Now, it might be too soon to start talking back to school, but shoppers who are facing high prices, they're already seeing discounts at a lot of these major retailers. Target, one of the best performers in the S&P 500 on this trading Tuesday. How about IBM? Hello, 5%. JPM upgrading the stock to overweight, saying it sees software acceleration with greater confidence in the second half of 2026. Shares up today, still down about 10% from the start of the calendar year. In this, the third and final installment of this episode of NYC Innovates, Cheddar's own Chris Castellino highlights one New York City startup that is implanting more brain chips than even Elon Musk's Neuralink. Take a look.
As of our interview, Precision Neuroscience had implanted 82 patients. That's more than the rest of the BCI industry combined.
We're now implanting roughly 1 person per week, or a little bit more than that. And so the data, because of our FDA clearance and because of the ability to work in so many of the best hospitals across the country, the number of people is really starting to scale. And I think what you're going to see, and we've already seen, is as the data scales, so too does the performance of the system.
Brain-computer interfaces are arguably medicine's most exciting frontier, but they're also its most ethically complex.
When a device is able to capture data that could reveal emotion, intention, and mental state, the question of who owns that data raises some public concerns.
There's nothing more personal than our neural data. I think when you think about this from an ethics perspective, enabling people who are paralyzed to regain control of digital devices, I think is pretty straightforward. But we also need to predict where this technology is likely to go and what potential regulatory gaps there are. I'll say, and I think that's happening. That conversation is happening through a number of different forums. One is the FDA has helped convene a collaborative community that includes an ethics and data security work stream that is really taking a very proactive approach to this question. So this is not like social media, like you sort of move fast and break things. For good reason, we operate in a very highly regulated area.
Then there's the question of what researchers have called brainjacking, the possibility of a cyber attack that can manipulate the brain signals in a BCI patient.
Theoretically, any implantable medical device could theoretically be jacked. I mean, there are millions of people globally who have pacemakers, if you want to take this down kind of a dystopian path, then that's a risk as well. I think the truth is that the FDA regulatory process requires incredibly stringent data security and data privacy precautions to be taken by medical device companies, including ours. And I think that's exactly to prevent the kind of dystopian outcome that you described.
There are implications that somehow BCI can transmit your thoughts elsewhere, can spy on your mind, or can somehow influence what you think. My experience so far has been there's nothing even remotely like that.
Precision Neuroscience has raised $180 million in 5 years. The company says equity of access is central to the mission.
We are working already today with CMS, so the Center for Medicare and Medicaid in the United States, which ultimately determines reimbursement for medical devices. It is critical to both, ensure equity in terms of access, but also in order to create a viable and large industry, that this technology, which is going to make a huge difference in people's lives, gets reimbursed by insurance companies, both public and private in the United States.
Morgan Stanley estimates the total market for BCI technology at more than $400 billion. This technology is moving faster than most people realize.
Our system actually is already cleared for up to 4 arrays being implanted at the same time. That's our FDA clearance. And that gives you a sense of how it's modular and how it's expandable over time. We've done that. We've implanted 4,096 electrodes. To our knowledge, it's the world record for the highest channel count, highest bandwidth connection between the human brain ever achieved, and external compute. But I think it also shows you where the direction of travel is, which is more and more bandwidth, more and more area coverage, and ultimately towards a whole brain interface. So a really thin film that covers the entirety of the brain in a way that is safe and scalable. I think creating foundational models for the brain has the potential to be really impactful in medicine and in drug discovery and other areas, and in technology as well. So I think that's something that will emerge from the BCI sector in the coming years.
So tell us, would you ever consider a brain-computer interface? And what would it take for you to say yes? Let us know in the comments below. For Cheddar, I'm Chris Castellino.
Welcome back to the show. Ashley Ebersol joins us now. He is the co-founder of TX, a marketplace for real-world assets. We're going to talk SpaceX, tokenization. There's a lot of things going on. Grateful for your time today.
Great. Thanks so much for having me, JD. It's excited to be here with you.
So it's the first time you and I are talking since the most closely followed SpaceX IPO. What did it reveal about the state of tokenization? Maybe some of the limits in that conversation?
So I think it was a massive IPO, and you had demand outstripping supply 2-to-1. Anytime you see that, you're going to have orders that go unfulfilled. You had that in the traditional markets, and you had it in crypto markets. It happens that there were pre-sales of some tokenized stocks through some of the platforms, and those just didn't get fulfilled. So TX, where I am, we try to say, you don't have a token minted until you actually own the asset. So a little bit of a different horse before the cart type thing. And yeah, I think when you have massive demand, things are harder to maintain.
In what way does tokenization maybe give retail investors out there a bit of better access to the IPO landscape?
I think as tokenization continues to mature, and tokenized stock providers are part of underwriting syndicates and that kind of thing, settlement is near instant. When they get an allocation of IPO shares, it's just going to give that access to a much broader audience and do it much more quickly.
What changes have already happened at some of the big regulatory agencies? Pick your acronym of choice, let's say the SEC, that have allowed for the adoption of tokenization, and in what ways does new work still need to be done at a place like the SEC?
So I think the SEC has, I guess the way I'd put it is, unrung a lot of bells that the prior administration had sought to using a lot of metaphors, had sought to put in the way of progress in this regard. And they've issued guidance, they've done everything they can most easily to say, we're going to clear a lot of that out of the way. You're still going to have to operate via the traditional rails, but we're going to make it easier for you to do that. So it's just a much more cooperative, forward-thinking administration at the SEC.
When people buy a tokenized version of a stock, what is the actual asset? What do they actually own? And I ask because we got a lot of would-be investors out there, and they're trying to become smarter investors by the day.
No, and thank you for raising that, because investors have to be really conscientious about what they're buying. Just know what you're buying. Some of the products are synthetic. They provide price exposure, but you're not actually owning the underlying stock. With a platform like TX, at time that you press purchase for, let's say a share of a given stock, a token is minted. So you don't have the token until you actually have the underlying share that's maintained in custody for you. So in that way, the two markets really act in parallel, but it gives you something you can hold in your digital wallet. So, people just have to be aware of what they're buying. And so in some cases, it's going to be price exposure, something that behaves a little more like a derivative. In our case, it's an actual stock, just something you can hold in your wallet.
Ashley Ebersol, co-founder of TX, really grateful for your time. Thanks for stopping by the show today.
Thanks so much for having me,
Take
JD.
good care.
This
We'll
is
do it
great.
again soon. Don't go anywhere. Watching the Home Post. Got a lot more Taking Stock coming up live from the big board after this. Time now for the latest headlines in the world of fintech, crypto, and artificial intelligence. First up, the crypto majors are in negative territory. Bitcoin, Solana, and ETH down 2%, 3%, and 5% respectively at this hour. Next up, former New York Governor Andrew Cuomo leading a new tokenized stock joint venture between crypto exchange OKX and the New York Stock Exchange parent company, Intercontinental Exchange. Finally, NVIDIA says its new liquid cooling tech can cut down data center water use by up to 100% at the facility level, though critics argue AI's broader footprint remains tied to energy generation and chip manufacturing. Earlier today, FinTech TV's very own lead anchor, Remy Blair, sat down with Stu Wall of SetPoint. They discussed the latest in the suddenly turbulent market of the world of private credit. Take a look.
Joining me live here at the New York Stock Exchange this morning is Stuart Wall, CEO and co-founder of SetPoint. Stuart, good morning. Great to have you here. Thank you so much for joining me.
Thanks for having me.
Well, as we reflect on the first half of 2026, we know that private credit has been an area of concern. So when we peel back the layers of the onion, what is happening and what is happening when it comes to the systemic level?
So I think there's a lot of anxiety in private credit because we're talking about retirement savings. And people invest in private credit to get a steady return. They're not looking for a moonshot-like SpaceX outcome. So when the value of the assets falls, there's a lot of anxiety. And I really think we're conflating two issues in private credit. So first you have direct lending, and there's been billions of dollars invested in software companies over the last decade. And now in a post-AI world, there's concern about the value of those companies, so there may be some challenges with recovery. I think the second category though is asset-backed. So any capital backing real assets like cars, houses, receivables. The credit quality there, is very strong, but there's been some fraud. So MFS, Tricolor, First Brands. We think that's a governance issue. It's a really important issue to fix for the investors, but it is fixable. So I think what you're going to see with private credit is it will continue to be a really important part of kind of the retirement income category, but you're going to see a rotation from direct lending and software companies to asset-backed.
Yeah, so I think two key words that you mentioned there are fraud as well as rotation. So how can fraud happen in such a closely watched market?
Yeah, so let's take Tricolor as an example, so an auto lender. Basically, the industry works where you can send emails, Excel, and FTP folders and advance billions of dollars of capital. In Tricolor's case, they advanced $2.2 billion against $1.4 billion of real assets. That was $800 million fraud that directly resulted in the bottom line for those investors behind it. And the industry really kind of runs on this kind of, you can submit an Excel that's not verified and you wire against it. We make the analogy to kind of the paper check industry. So it used to be decades ago that I would send you a check, that would get routed to your bank, they'd eyeball the signature. That's obviously very slow and error prone. Now we have ACH, that's a standard protocol with data verification and settlement. We do 86 trillion a year now through ACH. I think the ABF market, asset-backed market, has not yet had the ACH moment. I think some of this fraud could be a catalyst that has some of these large investors rethinking the practices that are in place that do enable fraud like Tricolor.
Yeah, so identifying these blind spots is key. So what are you doing to address these blind spots?
So SetPoint's my company, and we're trying to create a new standard for asset-backed finance. So we don't want any more of this kind of email, Excel, PDF, trading back and forth. We connect directly to the systems of record. We organize and verify all the asset data at the asset level. We do all the calculations for waterfalls, so who owes whom what, and compliance. And then we have all the workflows for approvals and changes. We think when you put that together, you have something that would prevent things like Tricolor, makes the market more liquid, it makes it faster, less error prone, and there are real results. So when we onboard new clients, whether it's a borrower or a lender, we kind of upload their existing reports, and we see mistakes about 7.5% of the time in those existing reports. And again, these are kind of reports that are being used to funnel billions of dollars between these companies.
And Stuart, finally, before I let you go, all of us are keeping a close eye on artificial intelligence. So when it comes to the role of AI in private credit, tell us what you're seeing right now and what your expectations are.
Yeah, so I think AI in finance in general is both kind of underused and overhyped. So underused, there's about 3.5 million people in the US, kind of some of the most talented people in our economy that are doing kind of soul-crushing manual tasks, like looking at 2 Excel files or reconciling numbers. I think AI can help elevate those people and automate a lot of those tasks. That said, I think it's also overhyped. So if you look at some of the benchmarks for trading a financial model, the best performing models right now perform at about 30%. And that's where you have chained arithmetic, synthetic reasoning, all the things that are needed to create a financial model. And so you can't just point one of these AI tools at a problem and have it complete it end to end. So we think it's really something that is very powerful but kind of has to be used in the right way.
And lessons
Hey there, welcome back to the broadcast. Time now for the latest headlines in the world of startups, raises, and rounds for your Tuesday. First up, FinTech TV set to acquire financial terminology firm TAP. It's a stock deal valued at about $50 million, bringing together financial media and market technology onto one platform. Very exciting news. Congratulations to the entire FinTech TV team. Next up, Google backing a new AI incubator for former employees, offering up to $350,000 worth of cloud credits as the firm looks to deepen ties with the next generation of AI founders. And finally, Menlo Ventures raising a record $3 billion for AI investing as its early bet on Anthropic grew into a stake reportedly worth nearly $14 billion. And now Money 2020's very own Scarlett Sieber is back with a new edition of Hindsight 2020. That's where she breaks down important dates in financial history. Take a look.
Welcome back. I'm Scarlett Sieber, and this is Hindsight 2020, where history reminds us that the biggest shifts often look like convenience at first. So let's rewind back to 2011. Apple launches the iCloud. At that time, it sounded simple. Your photos sync automatically, your files follow you across your devices, no more cables, but beneath that convenience is something much, much bigger. iCloud marks the moment data stops living somewhere specific and it starts living, well, everywhere. Before this, information was local, on your computer, on your phone, in a place you could point to. After iCloud, data becomes abstracted, persistent, always available. And that quietly rewires finance. Once data lives in the cloud, financial systems become software first. Resilience becomes vendor dependent, scale accelerates, but concentration risks rises. Let's fast forward to today, it's 2026, and cloud infrastructure underpins payments, trading systems, risk models, customer data. The upside is efficiency and speed. The trade-off is fragility when a few providers carry everything. June 2011 wasn't about storage, it was about trusting someone else to hold what matters. And that is Hindsight 2020, because once data leaves your hands, confidence becomes the real backup. And with that, back over to you.
Welcome back to the show. We are still live down here on the trading floor of the New York Stock Exchange. We'll get you quickly caught up on what to expect tomorrow morning here on Wall Street. Actually, tomorrow afternoon, I should say, 4 p.m., the Federal Reserve will be releasing its annual bank stress test results. That's a lot of key information there in terms of the financial health of the U.S. economy for investors to digest into Thursday morning session. Also, this time tomorrow, the latest figures from Micron, ticker symbol MU, set to cross the wire. Shares down today, but up an incredible 267% so far here in 2026. Before we wrap up the broadcast live from the big board, here are how stocks traded. The S&P 500 down 1.4%. The Dow Jones Industrial Average down fractionally in negative territory, 0.09%. The New York Stock Exchange Composite Index in the red, 0.56%. And the small caps, the Russell 2000, after a huge few sessions, is down on the day, 0.96%. Thanks for watching today's edition of Taking Stock live from the trading floor of the New York Stock Exchange. Have yourselves a great Tuesday night. We'll see you again tomorrow from the big board.